Coming up on Market to Market, USDA throws a lifeline to farmers. California fights the spread of a deadly disease. Winter storms return for another engagement.
For that hard red winter wheat contract.
Those stories and market analysis with Elaine Kub, next.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, January 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. In the wake of the partial government shutdown, private economic intelligence reveals the trade war continues to put pressure on rural America. Tariffs and low commodity prices pulled the rural MAINSTREET index 3 points lower this month. Half of the rural bank CEOs surveyed are concerned about farm loan defaults in 2019. Worries about tariffs and trade moved the University of Michigan's Consumer Sentiment Index to its lowest point since before President Trump was elected. Unconfirmed reports that Secretary Mnuchin wants to ease tariffs, and a Bloomberg story that China offered to go on a 6-year buying spree moved the Dow Jones Industrial Average higher to end the week over 24,000 points. As many federal employees are ordered back to work without pay, the nation's farmers continue to shoulder the burden of a trade war with China. The spat in Washington is making it difficult to plan for an already cloudy future. Peter Tubbs has more in our cover story.
The week began with Phil Kading of Casey, Iowa, loading hay ahead of a January snowstorm. While his fields sit frozen on this 10-degree morning, 800-pound bales of last summer's hay are readied for trucking to a feedlot 30 miles away. The sale will inject cash into his operation, which is currently caught in bureaucratic limbo due to the partial shutdown of the federal government.
So right now, with the political fighting going on in Washington, D.C., we have a pile of grain checks here. The FSA office is closed.
The Guthrie County Farm Service Agency office, like dozens of others in rural America, closed their doors on December 28th as part of the government shutdown caused by a dispute over funding for border security. Producers with loans through the FSA have to certify payment checks as they arrive and coordinate their spending plans before funds are deposited. The shutdown has left many producers in a squeeze, unable to deposit checks from grain that has been sold, and also unable to collect market facilitation payments to reimburse farmers for income loss due to Chinese tariffs on American soybeans. Corey Aronson is a banker in Belle Plaine, Iowa. A group of his ag borrowers did not get their market facilitation checks before the government closed.
A lot of those customers are waiting for their MFP payments. That's kind of put them in a bind on, they were relying on those payments to come to pay off supplier financing or to make their term debt payments. So, some of those payments are sitting past due currently as they wait for their MFP payments, rather than trying to sell grain on the down market.
I'm not going to sit here and blame them. I get what they're doing, but on the other hand, we're running out of lunch money out here in rural Iowa.
Kading's farm has been in his family since 1911. He feels a heavy burden to keep the operation alive. Recent bad weather and low commodity prices have been emotionally devastating for Kading.
And when you do every single thing you can do in your operation to make things work, and nothing's working, and at the end of the day it's because of the market price, that is really, really disheartening. Farmers will do a lot and take a little, but But eventually you get to the point where mentally you get wore out.
A hailstorm destroyed 2/3 of Kading's crop in 2014, and he has been playing financial catch-up since. Low commodity prices have made that difficult. Kading currently is plowing snow for the Iowa Department of Transportation part-time and is exploring full-time, off-farm work as a bridge to keep his operation going.
But like many others, I'm probably looking at getting a full-time job, and this farming thing is going to be on the side.
On Monday, President Trump spoke to the annual convention of the American Farm Bureau.
Had so many good weeks and good days, and it's only going to get better because we're doing trade deals that are going to get you so much business, you're not even going to believe it. Your problem will be, what do? We need more acreage immediately. We've got to plant.
48 hours later, the USDA announced that FSA offices would reopen temporarily for 3 days to facilitate the paperwork needs of farmers. Kading was able to complete the forms, deposit his grain checks, and pay most of his loans from the 2018 crop year. But the FSA is not originating any loans for the 2019 crop year while the system is shuttered. Farmers needing FSA loans remain in a holding pattern for the coming year.
Oh, we're probably a month and a half behind now. Yeah. In March, March 1st is cash rent, so it's going to be a struggle to get all the paperwork done.
They're trying to get all their financing needs for putting in the 19 crop, trying to liquidate their 2018 crop to pay down their lines of credit from last year. That January to March timeframe is kind of the worst timeframe. The government can be shut down on a farm economy aspect.
For farmers in need of FSA financing for 2019, the wait continues. For Market to Market, I'm Peter Tubbs.
As U.S. and Chinese trade officials plan another round of talks, there is a deal in the works to improve poultry exports to China. The news comes as an outbreak of Newcastle disease, a virus deadly to birds, hit California. Golden State officials were able to hold the disease at bay for nearly 7 months, but to no avail. Colleen Bradford-Krantz has more.
California officials announced last week that a disease capable of decimating poultry flocks across the nation had been detected at another commercial operation. The discovery, the third in less than a month, dashed earlier hopes that an outbreak in hundreds of backyard flocks might stay clear of larger producers. Chicken and other poultry exposed to virulent Newcastle disease, which is often fatal to unvaccinated birds, must be euthanized to prevent the spread of the costly illness. Since first found in May of 2018, state and federal officials have been working to stop the disease in Southern California's Los Angeles, San Bernardino, and Riverside counties. An estimated 430,000 commercial birds have died or been destroyed as part of the attempt to contain the disease. This is in addition to 66,000 birds from backyard flocks.
I remember the last time we had the disease about 15 years ago, and it wiped out about 3 million plus birds. We do not want this to happen again. We want to try to stop the disease as fast as possible.
The symptoms of the highly contagious Newcastle disease include swelling around the bird's eyes, along with a twisting of the head and neck. The virus can cause mild symptoms in humans who work with the birds, namely pink eye. No human case has ever occurred from eating poultry. The California Animal Health and Food Safety Lab in Davis, California, has been busy testing flocks in an attempt to be proactive, and a task force is educating the public about biosecurity.
Always change your clothes, disinfect your shoes, take a shower before you visit somebody that also has birds, and ask them to do the same.
For Market to Market, I'm Colleen Bradford-Krantz.
The National Weather Service is caught up in the partial shutdown. Vital data for an upcoming winter storm is being provided even as forecasters remain unpaid. Severe weather has also had a devastating impact on more than one business, putting them in a financial corner. Paul Yeager has the details.
The impacts of the 2017 and 2018 California wildfire seasons are still being felt as the nation's largest utility, Pacific Gas and Electric, announced intentions of filing for bankruptcy. The company faces at least $30 billion in potential damages from lawsuits over catastrophic fires that killed scores of people and destroyed thousands of homes. PG&E's filing is expected by the end of the month and would be the largest bankruptcy by a utility in U.S. history.
The storm is very unstable. It has a lot of potential for thunderstorms.
Scientists in the West were concerned about forecast massive rains this week that would have precipitated mudslides. Local officials prepared as best they could, but less than expected rainfall limited damage. Cleanup in the Show Me State and beyond was a major activity in places from Columbia, Missouri to Baltimore, Maryland. More than a foot of snow was left behind from a storm that killed at least 3 people and cut power for tens of thousands. The National Weather Service has winter watches and warnings from the Rockies to Maine as the storm is predicted to move east. Schools in the Midwest were delaying or canceling classes altogether on Friday. Travelers try to outrun the storm in Iowa, where 4 to 8 inches are in the forecast. The snow amounts are expected to be higher in the eastern United States. For Market to Market, I'm Paul Yeager.
Next, the Market to Market report.
Rumors that an offer by the U.S. to lift tariffs and reports of expanded Chinese buying moved the corn and soybean markets higher. For the week, March wheat lost 2 cents and the nearby corn contract added 4 cents. A rumor trade tariffs would be eased when up against good weather harvest in Brazil. Between Monday and Friday, the March soybean contract bumped up 23 cents to finish 7 cents higher for the week. March meal rose 50 cents per ton. March cotton gained $1.40 per hundredweight. Over in the dairy parlor, February Class 3 milk futures fell 28 cents. The livestock market reverted to mixed conditions. February cattle put on $1.55. March feeders shed $2.07, and the February lean hog contract cut $1.42. In the currency markets, the U.S. dollar index soared 77 ticks. February crude oil finished $2.21 per barrel higher. COMEX gold dropped $6.90 per ounce, and the Goldman Sachs Commodity Index climbed more than 10 points to finish at $412.90. Joining us now to offer insight on these and other trends is one of our regular market analysts, Elaine Kub. Elaine, welcome back.
It's always good to be here.
Elaine, I'm excited to get your opinion. We've got the government shutdown going on right now. I was reading some commentary this week that discussed what impact this government shutdown could have on the economy as a whole and, of course, trickle into the commodity markets. What are your thoughts on that?
Yeah, and from my understanding, it kind of depends on how long it goes, but there could be scenarios where the government shutdown lasts long enough and these knock-on effects on small businesses, for instance, or the matters that Colleen's story covered, that they would eventually, take the U.S. GDP potentially to 0 in 2019. Now, those concerns that we had even in December about the triggering of a global recession, if the U.S. economy stopped growing the way that there are concerns about the Chinese economy slowing and other economies slowing, if this becomes a U.S. problem too, then those concerns about a recession become more real. So to avoid that, we would need to have the government get back going.
Yeah, and everybody wants that to happen.
I think so.
Because it's impacting a lot of things, including export numbers. Elaine, tell me, we've heard rumors trickling around this week that China may want to suddenly start importing wheat from the United States. Why would they do that and not turn to Russia, Europe, Australia, some of these other partners?
It could be part of the negotiating strategy. I honestly don't know. I'm not inside the rooms where they're doing these negotiations, and it seems like any of these rumors, they happen, and 5 minutes later, it's the opposite.
Does it make sense, I guess, from a pricing standpoint, to bring in wheat from the United States?
Yes, absolutely. And if you look at freight opportunities, sure, they could easily get some of that affordably priced U.S. wheat. It could move to China.
Really quick here, winter weather, we're hitting that this weekend across the plains, across most of the U.S. What's that going to do for winter wheat? Are we going to see some winter wheat kill?
No, I don't think so. I think at this time of year, we don't tend to worry too much about winter wheat. actually, snow cover would be good for it, and I don't know that it's going to be enough to be a big market mover at this point.
Okay. Elaine, let's talk about corn. I read an interesting idea this morning about the idea that corn as a whole needs to have futures trade higher in order to see more acres switch to corn next year. What do you think about that idea?
Yeah, and the critical time frame for that is traditionally February, because that averaging of the new crop December contract through the month of February is going to be how we make crop insurance reference prices, and decisions will be made off of that. So if you continue to see this price ratio between soybeans and corn continue to favor corn, then yes, I think we would see more corn acres, and that's the big risk for corn. I believe the new crop corn market certainly has downside risk, and earlier than usual this year, because there will be so much attention paid to, will there be planting more corn on corn? We already know the minimum amount of corn acres. You know, people put fertilizer in the soil in the fall, but they could certainly continue to boost corn acres if the spring continues and we don't have something change to the soybeans.
When we look at the world corn industry right now, corn market right now, U.S. corn is currently the best priced as far as exports go. How long do you expect that to hold?
Well, I don't expect to see a whole big change in the corn market. The corn market has been flat for basically since 2014. It has been in a sideways range, and unless something strange happens to the fundamental supply of global corn, I don't think that we would expect to see a major price change. The things that could be happening this time of year would be that second crop in South America. That's still up in the air, how those numbers will come into the global corn supply numbers.
Break it down for me, Elaine. This week we saw soybeans all over the board, we saw corn all over the board, but we finished stronger in both corn and soybeans on Thursday and Friday. Was it just due again to Chinese trade rumors?
I think it was. I mean, just the style of it, where you have that sudden burst of buying, and it's really hard to say who was doing the buying. This is the one report that I think that analysts really miss when the government is shut down, is that commitments of traders that shows you who's doing the buying and selling. But when you see a big burst like that, that's not backed up by any change in the spreads necessarily. That's not showing a fundamental change in the outlook for South American crops, for instance, and it's not really backed up by any major change in the South American weather forecast. There's nothing really fundamental behind it except that rumor idea.
When you look at South American weather, we're still seeing, and of course we don't have government numbers being issued in the U.S., but the last report that the U.S. did release are not even close to the numbers that we're seeing released in Brazil. What do you think the realistic numbers are going to be production-wise for soybeans?
Right. The private estimators are looking at much less than the USDA's last weigh-in at 122 million metric tons. Private estimators are looking to trim that down perhaps past 120. So we're not looking at a record high crop, and I think that we can pretty well set that idea to bed. We are seeing in the weather forecast chances for some rain in the next few days, but then the ridge builds up again, and you've got more of this heat, more of this dryness, and that's not great at this time of soybean production when those pods are supposed to be filling. So I don't think that we need to worry about a bearish big record crop by any stretch of the imagination for South America, but perhaps not enough to change the structure of the soybean market overall.
Okay, Elaine, really quick here. We've got a really interesting social media question from Philip in Dresden, Ontario, at Agrodome on Twitter. Seasonally, soybean prices tend to rise into the spring, but this year with fundamentals being so bearish, should we still expect those prices to rise per usual?
You know, there was an old grain merchandiser once that told me that you should always get your wife soybeans for Valentine's Day, that's the best.
That's nice.
That was due to the seasonal pricing of it. I think the expectation for soybeans for the past couple of months has been waiting and waiting for good news, like actionable good news, not just a rumor, some evidence that China is going to be buying lots and lots of million metric tons to make up for that hole that we have from November and December. And that hope seems to have faded away. I think we've seen the soybean market come up 15, 20 cents, which has been good, but then the options traders have sort of stopped their appetite for call options that would imply this big upside potential for that trade scenario being fixed. That seems to have faded away. This may be all we get.
Okay, for the entire spring season.
It may be. I mean, it really depends on the trade negotiations. If there's no evidence of something changing there, then maybe there is no reason for folks to risk storing these old crop soybeans that you don't like to store into warmer weather. Perhaps this is an opportunity.
What about when we look at the cotton markets? Is it the same story there, just waiting to see what happens with trade negotiations?
Yeah, the difference, so cotton has kind of moseyed along higher alongside some of these other agricultural markets in the past couple of weeks, and that's been good. But the difference is it doesn't have this downside pressure. It's not coming up against recent highs that would make people want to sell it. So actually, I see continued upside for cotton. Maybe not 80 cents, but I'm not in a big hurry to be selling cotton at this point.
How much more upside we talking here?
Maybe 2 or 3 cents.
Okay.
I mean,
so not huge.
No,
Okay.
but it's not toppy the same way that these range-bound corn and soybean charts are.
All right, Elaine, let's talk about live cattle and feeder cattle from a big picture standpoint here, heading in again to this, winter weather or this winter blizzard that we're seeing. What effect is that going to take on the live cattle and feeder cattle markets?
I think that's absolutely what's been happening this week, and it's more of a futures trade than a cash trade, that we saw the live cattle markets go up on this weather scare, when in reality, this is not going to be a mud scenario. This is not going to be a stress on that gain.
If anything, will it make weights pull back maybe a little bit?
Right, you could have a scenario where the packers would be coming in and receiving cattle at a lower weight. So that's why there was a justification and a reason for speculators to get a little bit bulled up on the weather forecast. But now that the forecast is going to be moving past us when we start trading in again on Tuesday, that weather thing may have happened in the week behind us, but not again in the week ahead of us.
You don't expect us to see that again going into this next week with all this snow and whatnot we're expecting?
It's not a logistical scenario that would be driving down weights any more than's already priced in.
Okay.
And again, this is another one of those charts where we see that April contract about as high as it got last year at this time. It's looking toppy.
Okay. What about the difference here in futures to cash? Are we going to have to see higher futures prices to see a higher cash price pulled up with it?
Well, I think it's a different story between the live cattle and the feeder cattle.
Let's talk, live cattle specifically.
Yeah, the live business, I think, has legitimately backed up this price gain that we've seen in the futures because the packers are legitimately needing to get more cattle to make up for the lower weights that they're seeing and to make up for any sort of logistical shortfalls that they may see in this weather scenario.
All right, let's talk feeders here. And we talked a little bit now about the weather having its toll. What about moving forward, Elaine? Are we going to see continued replacements? Are we going to see any impact there from weather with replacement numbers?
I think if anything, if perhaps the live cattle futures was a little oversold on this weather, feeder cattle have moved in the opposite direction, which of course is very good for feeding margins, but it might be oversold in the opposite direction because of logistic issues. Nobody wants to be buying pots of feeders at this point in time. And yet when you look at the actual cash business that's going on at the sale barns, that has not dropped the $5 that we've seen in the feeder futures in the last couple of weeks. It's only dropped maybe $1 or $2, on an average basis. So I think that it may be overdone on the futures side and less of a reality in the cash side for the feeders.
Okay, Elaine, let's round out our discussion with, of course, the lean hog markets. We're seeing a premium built into the April months and beyond in the lean hog markets. Is that just a seasonal thing getting ready for a summer rally, or is there something else going on there?
It's both. I mean, yes, you would see that, but you're talking about $80 in July, August.
Yeah.
And I think this is part of this African swine fever story, and it's been the story that we've had for months now. We've always been saying this is going to be a problem 6 months from now, and we're just going to keep on saying that and keep on saying that and keep on saying that. So we've seen the whole hog sector sort of dwindle back down. I think some of those speculative traders that wanted to see like real evidence of bigger numbers being destroyed in China. I mean, 1 million hogs is a number
I think we're close to 1 million now.
Which is a big number, but it's not as big as it would take to justify some of those really high prices we saw 6 weeks ago in the hog futures. So I think it's come back down. Some of those speculators have probably come out of there. But it's more of a 6 months down the road story.
What impact will it have? I read this morning that in 2019, the ag ministry in China said they were expecting to cull their herd by as much as 20%.
Yeah, that would be huge. And if you continued at the same pace, if you have this 1 million head that gets destroyed, if you did that every month for a year, you'd be talking about somewhere between 1% and 2% of their total herd. So it would imply an acceleration in the spread of the disease compared to where it is right now. So, and if they're saying that already and admitting that, in public numbers, that is pretty alarming.
And what impact if, let's say, really quick here, let's say we do see that, what's going to happen? Hog prices, how much higher could they go if we see a call of that large?
If we saw that translate into export business to the U.S. in a big way, and, we talked about poultry being exported, this affordable protein going to China, it could...
How much higher?
Hard to say. Let's say $15. Let's say that $80 is real.
We'll leave it there. We'll take the rest in Market Plus. Elaine Kub, thank you so much.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Twitter remains our first social media love. The 280 characters help us share links several times a day of our stories and photos. You can also leave us a question for the Analyst of the Week. Give us a follow at Market to Market. Join us again next week when we'll look at a 100-year-old farmer's market in the middle of a food desert. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.